Big changes are happening to the markets, and a lot of tried and true metrics are about to break down. This is according to our next guest, Gianni Kovacevic, CEO of CopperBank, joining us from the Minds of Money Online Connect conference. Gianni, welcome to the show. It's always a pleasure. Thanks for joining us today.
It's great to be here with you guys virtually, like everyone's doing these days.
Yeah, lots of exciting things to talk about on the agenda: copper, helium, electric vehicles. Let's start with copper. We've seen prices closely mirror the S&P 500 and broad equities indices in general over the last 6 months or so. Is this a trend that we're used to seeing, and can this correlation be expected to continue, Gianni?
Let's call today's interview the contrarian's delight. So I believe a lot of these tried and tested metrics are going to break down, and they are breaking down. The first one that we've seen occur is this, what has been very reliable, the oil to gold ratio, where traditionally, if you look over the past 30 or 40 years, it took 16 or 20 barrels of oil to buy 1 ounce of gold. Today, as we speak, it's about 42, 43 barrels of oil to buy 1 ounce of gold. Now, I believe gold's going to trend higher. I believe gold is a currency that there's just so much money in the world. What do you pick? Where do you put billions and billions of dollars of asset class? And there are many people that are choosing that. So I'm not going to bet against gold. Gold going through $2,000 an ounce, I think that's not an if, but a when question. So will we ever have a ratio where it's 16 barrels of oil to buy 1 ounce of gold? I think that'll only be determined because of politics, not because of fundamentals anymore. And farmers have been telling people that they don't rely on the weather as the number one factor. They rely on politics, because one tweet or one change in policy changes their business for the long into the future. And I believe the same is happening across the commodities. And now we're going to talk about why that's going to be the case for copper.
Okay, now do you believe, just on that point, do you believe the current political situation right now is stable and reliable enough to build indicators for the metals and economic forecasts? I mean, we've seen President Donald Trump come out with tweets that have surprised the markets and investors in the past. How can economists and metals investors like yourself accurately and reliably use this indicator?
Well, these are not investors. People that in the metal space across the board, these are speculators, in my view. This is a yes and no answer. So obviously, I don't think the global economy is going to be buoyant for quite some time in the future. 2020 is already a write-off. You can throw that out the window. 2021, we'll see what it looks like. There's going to be a lot of stimulus. It's been probably in excess of $10 trillion. It's going to be thrown into various schemes and various stimuli between China, Europe, and America and other parts of the world. So as this money is allocated, it's the flow of capital. Where's it going to go? There's now talk of, instead of doing $250 to $300 billion a year in renewable energy schemes, which is what we've seen the last 7, 8, 9 years, they're now talking about doing $1 trillion a year globally towards these job creating, move on with this global pivot to fossil fuel-free energy, its technology, its innovation. And it's going to have a subliminal effect where it's going to be very hard to compute or calculate or analyze just how important that's going to be to the building blocks that enable what will be, in my view, $1 trillion a year going into renewable energy. And of course, the granddaddy of them all, the enabler of this, is going to be copper. And it's going to break all the models and all the old rule books that people follow. They called copper the PhD of the global economy, and that's tracking the S&P, which it has done reliably. This is all going to break down. And it's simply because it's so pervasive throughout the global economy, where, in my view, and I've been saying this for some time now, probably the last 3 or 4 years, that people that have read my book and seen some of these other interviews, but this is actually manifesting itself. Copper did not collapse in price like oil during the COVID crisis. And when we looked at the warehouse levels, there was a small blip of inventory increase, but now that's come away because not only was demand destruction, but we also had a lot of the global mines shut down in key countries like Peru, the big Cobre Panama, and elsewhere in Chile and around the world.
So, Gianni, let's look at copper prices in more detail. Are markets always right? And I ask that because what we've seen over the last 2.5 months since March lows is a steep recovery in copper prices. That signals to investors that market sentiment for economic recovery is high and optimistic and positive. Do you agree with what the markets are pricing in respect to copper prices?
I think one has to agree that in the medium or long term, markets are efficient and the pricing is correct. In the shorter term, I think markets are inefficient. So when you have so much uncertainty, and because this, as I've already alluded to, this is traditionally run by speculators, they are all speculating what will happen in the short term. But now that the price of copper has recovered somewhat, you always have a day of reckoning. And we know, people that follow the copper space very closely, it's not really a robust business. When copper prices are $2.50 a pound, yes, it's true that 80 or 90% of the copper mines in the world can make money or turn dollars, but there's also 10% of these guys don't make money. And if you look at, we already, in my view, copper, the CAGR growth rate for copper is going to be steady and in fact robust over the next sort of 7-10 years. So if demand is there, what about supply? We know that 75% of the development projects in the world that were delineated and brought forward to economic studies in the last 10, 15, 20 years, they simply are not feasible at sub $3.50 a pound copper. You don't have to do a feasibility study anymore. So these things are going to collide, and it happens very quickly, because the thing that I've been saying, running out of a commodity does not matter until it matters, and then it matters a lot. So when this unholy alliance breaks down, and that's when you actually have a shortage, where people, the businesses doing well, those that are going to feed into this $1 trillion a year of stimulus, eventually, that you're going to see inevitably you have to see an increase in copper prices. And that's where the contrarian and any investor watching this program, they have to be aware of this. And of course, most people are, but they've been saying for copper, hey, that's next year's investment dollar. I'm not going to worry about that today. I think that time is coming to a close here, especially with so much money that's been made in the gold space in the last sort of 30, 60 days. Question, are we going to see some money rotate into things that are underloved, like copper? I'm speculating that answer is yes. And that's where you're going to see 5 and 10 baggers created by people that are following quality juniors in the copper space.
Okay, let's come back to that point in just a minute. But first, China, the world's largest market for copper, they've seen their first recession in decades. How is this going to weigh in on prices, do you think?
Well, is it a recession? It would make a total sense that what we saw with COVID, that unemployment rates skyrocket, growth rates are curtailed. In fact, this is a once in a multi-generation event that has occurred. So I believe that the Chinese are also going to stimulate their economy to some $2 or $3 trillion. And we've already seen PMIs, which is looking forward, GDP looking backward, of course. We've already seen an uptick there. So I think that you're going to see, by the end of the year, you're actually see a positive growth rate in China. It's going to be 5 or 6%, something like that. So I don't lose any sleep at night with China, and it's something that I just doesn't occur with me.
Okay, and you just mentioned that dollars may be cycled into copper and metals. What do you mean by that exactly?
Well, I think people anyone that's owned a junior mining share understands that in past cycles, gold leads these things out of a bear market, and a lot of the money follows into copper, and copper is where the money is made. However, when people start looking at development copper projects, unlike gold, if we were to really scrutinize the gold space and look at projects that have 1 million ounces or have some kind of a historical economic study, there's over 100 such projects, and there's hundreds of listed gold development or gold juniors exploring for gold. When you get to the copper space, there are fewer than 30 listed companies that actually have a copper development story. So we think that when some of this money starts flowing into the copper space, they're going to be cramming into very few names. And that's why if you look at what I'm doing with CopperBank, we continue to support the company. It's not just words. I do what I say what I do, and people just follow my insider buying. I think these things are cheap. I'm not doing this because I'm a nice guy. I think that there's a 5 or 10 bagger in waiting for people that want to look at the copper space. And that is a classic contrarian investment right now at this time.
Before we move on, do you have a projection on how far copper prices can expand in the next 12 months?
Well, I think that the previous all-time high for copper occurred in 2011. It was $4.50 a pound. At the same time, the oil price was $137, $130 a barrel. Like the gold and oil ratio, I don't see those ratios coming back together again. To be more clear, I believe copper will surpass its old all-time high, and it's not hyperbole. I believe that's based on engineering, because the deposits of the future are very low grade. And the engineering is telling us, unless you can make these economic, they're never going to become copper mines. So if you can imagine in the theater of your mind a day when copper was back to $4 a pound, which isn't fantastical, do you believe that oil will be $120 or $130 a barrel on that same day? Maybe. I'll reiterate that I believe that's going to be driven by politics and not fundamentals. Because every time that we go away from oil and fossil fuels, it's something that's more, it's electrification and uses more copper by a power of magnitude. That is going to break down. So I think that can happen very quickly. But look at the incremental value for what I was talking about, these 30 development copper projects. Every 10 cents or every 20 cents that the copper price goes higher, the net present value, the torque on those projects that have established economic studies is just fantastic. You can look at any comparable of 10 or 15 projects and just use a sensitivity scale. And if you see $3.50 copper or $3.75 copper, that is where a 5 and a 10 bagger could occur. And again, it's not an if question, it's when. When that happens, the work has been taken place already. I think that could be a very good outcome for people that are going to follow that space.
Last couple months, we've seen kind of a hiatus in global conflict. With the pandemic hitting everybody, tensions with Iran have died down. North Korea has relatively stayed quiet. It's all coming back now. North Korean troops are mobilizing. Chinese and American tensions are rising with the escalation of a new escalation of the trade war. And we've recently seen clashes along the Indian-Chinese border. How do you view the global geopolitical situation now? Because you mentioned that politics are going to be the driving force behind prices. What's your view?
With these things, I'm an optimist. I understand. I'm a fan of history, and we've never lived in safer times. If you go back in history, the amount of people that died because of war or conflict, decade by decade, century for century, we've never lived in safer times. So I think that albeit those things are, it's noise, it is important. It doesn't derail the narrative for the next 10 years. It's the decade of copper and I believe Fatih Birol in the IEA that came up with this plan of investing $1 trillion per year for the next decade to accelerate renewable energy programs that do work. These are not fantasies. These are not fairy tales that when I studied 20 years ago, they simply weren't commercially viable. Nothing can stop this from occurring. Why? Have you seen the pictures of Delhi? You can talk about climate change. That's a bumper sticker issue, but they can see the mountains now. It's clean air. It's irrefutable in economy after economy. When you have fewer emissions, the particulate pollution falls, and it's noticeable. The electorate sees it. It creates jobs. It's going to be putting stimulus towards old technologies from a bygone era. That is not what's going to happen. It may happen in the odd place that just does not have progressive thinking. But around the world, this is going to take place, and the hand under the skirt of the Mona Lisa are the enablers. And of course, as everyone should know by now, it's King Copper. Only aluminum and copper can make this possible.
But Gianni, I know you've championed the idea of the electrification of the future. Let's look at electric vehicles right now. How has what we've seen in the last 3 months really impacted your projections for the future? How are people going to be able to buy and afford Teslas, for example, if we've seen savings rates skyrocket and an unemployment rate go up? Can people still afford to buy into the idea of an electric future?
Well, I'm going to answer that in a very selfish way. I believe what's happened with this COVID situation, we're going to be flying less, we're going to be driving less, people are going to be working from home, and we are in fact going to be selling fewer cars every year. But there's a silver lining for copper investors, because if you look at the global automotive industry, manufacturing 90 million cars, that is going to be curtailed significantly. But what about how much copper goes into that entire industry? We're going to see incrementally more and more electric vehicles as part of the global auto sales. And it takes 400% more copper to manufacture an electric vehicle. So in aggregate, the entire automotive industry, as a copper investor's perspective, is actually going to use more copper, even in an industry that sales are falling because of this impact. But then let's start superimposing self-driving electric vehicles and this massive investment that's going to take place to enable electric vehicles, which I'm talking about hundreds of thousands of superchargers and tens of millions of regular chargers for all these vehicles. That the recycling of these materials is not going to happen until your children, David, are driving a vehicle. Right now, it's about the installed copper base to enable this is going to go parabolic. And as Royal Dutch Shell is telling us, today, 20% of final energy is electrification. In the next 30 years, that number is going to be 50%, 50%. So the installed copper base to enable this is something you should not lose sleep about at night. However, it's going to be calamitous for many parts of the automotive industry as they have to do this painful, expensive, time-consuming process and invest tens of billions of dollars to pivot how they manufacture, sell, and how we as consumers utilize these vehicles. But for copper, it's actually a very happy story.
What would you say to the speculator who doesn't want to hold for 30 years? His time horizon isn't that long. What would you say to him?
I would say that you're looking at, if you look at some of the high-quality junior copper names, these things are trading at, if not all-time lows, near all-time lows. And if they don't have debt, if they own their project, a lot of money's been spent on it, you trust the management team, they're not going to dilute you into oblivion. You know, you're closer to the bottom than you are the top. And I will say for certain names, you have 1 penny of downside and $1 of upside. How do you not take that trade as a speculator? Yes, it may be boring for the next 1 week, 2 weeks, 6 weeks, but what we've seen cycle after cycle, when these penny shares, when they wake up, they don't go up penny by penny, they gap higher. And they're doubling and tripling in a very short period of time. So if you could just use have a little bit of confidence, if you could look at certain gold names that don't even really have an asset base, trading at 30, 50, $100 million of market cap, and a development gold project trading at many hundreds of millions of dollars of market cap. Start taking a look at some of those names that have $10 and $20 million market caps in copper, long as you're not going to get diluted into oblivion. And that's why at CopperBank, we hold that very carefully. That's one of our mottos. We don't issue warrants. We buy our own stock, and it's something that we believe is a very good tool for people to learn and understand copper development projects, and more importantly, to participate as a speculator. And then we should also talk about my favorite commodity right now, which is going to get a lot of press, helium.
Yes, that leads me to my next question and final question. Helium, you've mentioned offline, major disruptions are to be seen. Tell us about that.
I love helium because it's been taken up by big tech. It's a secret component that very few people understand. These server farms that are size of huge buildings full of these servers and computers that run very hot, they're using helium as a supercoolant. So the demand for helium has been growing 6, 7, 8% per year, and there's nobody been exploring for helium. So all of a sudden, the BLM, the Strategic Helium Reserves out of Amarillo, Texas, they did not do an auction in August of 2019 because they've effectively run out of helium. Yet, MRIs, the space race, the technology, and every other application where we used to use helium continues to grow. And so it's geologically very rare. And I've been talking about what is traditionally the highest grade helium basin in the world, which was on the New Mexico-Arizona border. And I've been following what's taken place there. And for processing of helium takes place in the United States in the four corners, where the 4 states come together. And Desert Mountain is a company that I was suggesting to people to follow more as a learning tool, because of the archive that they have to learn about helium on their website is fantastic, second to none. Took them 18 months to set up their drill program. They collared the well on June 17th, and today they announced a big discovery. 182 feet of thickness, high pressure, and they're going to be analyzing that for the helium content. And in the entire oil and gas industry, particularly those that follow helium, are anticipating what this could be. These guys have 64,500 acres in this basin. So this is no longer an exploration play. It's a field. How big can it be? I'm a speculator in this story, but I think people have to look at helium and look at what's occurred here. And I think this is a story that you're going to be reading about in the Financial Times, Barron's, and everywhere. Just like you saw booms in cobalt and lithium, cannabis, cryptocurrency, helium. It's going to be a story that you're going to hear about this year and next year, except there's very few places to play it. So be careful on people that are going to come into the space without real projects, but I think this is a fantastic commodity and something that's going to play well into the narrative going into the future.
Okay, you heard it here first. Helium about to blow up in the news world. Gianni Kovacevic joining us today from the Minds of Money Online Connect Conference, and I'm David Lin. Gianni, thank you very much for being on the show today.
Thank you. Safe travels and happy investing.
And thank you for watching Kitco News. We'll have more for you. Stay tuned.